Among the major deals in the first quarter were a half stake in OUE Bayfront, which sold for 634 million Singapore dollars, the sale of UT Point for $220 million, and the inclusion of 14 properties into the newly established Bousted Industrial Fund at $469 million. Analysts say the deals bode well for Singapore's property market.
There was a slight absence of these large institutional deals in Q1 of last year. So there is a little bit of a base effect there, but I think what we're seeing in early 2021 is a strong sign of confidence in the market. There's certainly promising signs of liquidity in the institutional side of the market. Most notably, what we've seen as well is a number of the most prominent global investors already active in the market. We've seen the likes of Blackstone, Allianz, NPS, Lendlease, AEW, and a number of others already making acquisitions this year. So certainly a lot of the larger investors are looking at Singapore as one of the shining lights.
Analysts say the interest isn't just coming from institutional players, but across the spectrum of investors.
Private wealth has been active as well. You look at 30 Nassim and you look at Eden, these are assets that were acquired by wealthy individuals or organizations. So they are certainly back in the mix in Singapore. We are seeing an increase in the number of buyers who are looking to buy for owner occupation, right? So a number of, and some of this is a good mix again. It's a good mix of local and foreign firms. They're looking at buying offices for their own use in Singapore. I think partly to hedge against increasing rents, which could come in the next 12 to 24 months.
What we also saw was that Singapore had the highest share of cross-border buyers of any market in Asia Pacific so far this year. In fact, cross-border buyers have accounted for nearly 3/4 of the total volume. So there's generally a lot more activity in a number of the smaller segments of the market as well. And that includes areas like the strata office market, lots of interest in the Shophouse market, as well as the industrial sector as well.
In fact, Colliers says that the property investment sales market in Singapore is on track to return to pre-COVID-19 levels over the next 3/4 of the year. But analysts are keeping a close watch on the pandemic situation as Singapore returned to phase 2 restrictions in May amid rising community cases.
Near term, the tightening social measures naturally will be a dampener in the growth momentum that we have seen over the past 1 or 2 quarters. But we take heed that we believe that this time round the measures are coming in fast and hopefully ahead of the curve.
Meanwhile, the industrial property space also saw a boost, with investment sales jumping 141% in the first quarter of this year to $1 billion. In fact, analysts say the pandemic may have benefited this sector of the market.
The pandemic has, in fact, boosted the demand for logistics and data centers. And if you can get hold onto a data centers, it's a very prized asset. Singapore is tough to find. And the main reason is because I think driving this, adoption of e-commerce, people working from home, the 5G network going forward, and Singapore drives demand for some of these supporting real estate. Some of the landlords that we have been talking to, they have been starting to move ahead of the trend of compressing cap rates. So i.e., it's better to buy early than later because we expect more capital to chase for these assets in the longer term.
There's another type of property that has done consistently well in Singapore despite the pandemic: shophouses.
The scarcity and the fact that the use of shophouses have become a bit more versatile in the more recent years has also attracted investors. Besides offices, you find very interesting F&B concepts in shophouses. Of course, you find hotels. In the last 12 months, we have also noticed an increase in interest in shophouses outside of the Central Core region. Yeah. So, for example, we have done transactions in the last 3 to 4 months for shophouses in Geylang, in Changi. So besides the factor of scarcity, the potential for capital growth or appreciation, then there is the attraction of a slightly higher yield compared to what they're buying in the city.
Analysts are agreed that the growth seen in the commercial, retail and industrial property market in Singapore in the first quarter was no fluke. A pent-up supply of liquidity among global investors and Singapore's handling of the pandemic have made the island an attractive destination for property investment.
There is clearly a lot of momentum gathering across most sectors. And when you compare Singapore against other countries, they have been really able to keep the pandemic relatively well contained. And the economy is, of course, on the way to recovery. However, that is not necessarily always going to be in a straight line. We believe that commercial assets remain a very attractive prospect, particularly as more tech firms start to set up their bases in Singapore. And then coupled with landlords in the CBD looking at leveraging the URA incentive scheme to redevelop and reposition assets in the central areas.